gold has gone down quite a bit since the election, but I mean, if you go back over the last 15 years, gold's had a pretty good track record. And it's interesting that the reason that so many people have turned bearish on gold is because they believe that we're going to have more inflation under Donald Trump, that we're going to have larger deficits as a result of tax cuts and increased government spending, and that because of the higher inflation, the Fed is going to get more aggressive and raise interest rates, and somehow the increase in interest rates is what's going to be bad for gold. This is ridiculous. Higher inflation is good for gold, and even if the Fed is raising rates slightly, even if it manages the 3 hikes that people think are coming next year. And remember, they were telegraphing 4 hikes this year, and they only gave us 1 in December. And the Fed is actually less optimistic on the economy now than they were a year ago. If you look at their GDP forecasts, I even doubt we're going to get those hikes. But even if we do, I think inflation is going to rise much faster than interest rates, and so real interest rates are going to fall, and that's when gold shines brightest, when you have inflation that is not being fought aggressively, like during the Bush term, when Greenspan was raising rates every quarter, every time they met, and gold prices went from under 300 to 1,000. Or if you go back to the 1970s, when the Fed was behind the curve on inflation, and gold went from 350 to 850, or from $35 an ounce to 850, while the Fed was raising rates. So I think the idea that higher inflation is bad for gold is preposterous. I think they're right, we're going to get more inflation, but it's not a negative for gold, it's a huge positive. And the markets were wrong about gold at the end of last year. They sold it off when the Fed raised rates. It bottomed out in January and then had a huge run. I think we're going to have another big run next year, but I think next year we're going to finish the year strong as opposed to have this Trump-related sell-off.
But a lot of people look at this, Peter, and they say just because, you know, the Fed wrongly predicted 4 hikes, we only got 1 hike, just because that didn't work out doesn't mean that that's what we're going to see in 2017. They would argue we're on to new times. They're looking at the data out there. They're looking at GDP showing, you know, solid growth, over 3%. They're looking at corporate profits continuing to rebound. So how can we confidently buy into the theory that we are on to a gold bull run? Or do you not necessarily think that's the case anymore?
Well, first of all, GDP growth for this year is going to end up below 2%. And the Fed is only forecasting 2.1 for next year. And I think they're too optimistic. So we're not getting 3%. We'll be lucky if we get 2%. We may not even get that. We could be on the cusp of a recession right now. It wouldn't surprise me to have a recession early in the first year of the Trump term. And I think the reason that the Fed waited until December to raise rates by a quarter is because, in contrast to their claims to have confidence in the economy, they have no confidence in the economy. That's why they waited so long, and that's why they raised interest rates so little. Remember, when Alan Greenspan cut interest rates to 1%, in the aftermath of the tech bubble bursting and September 11th, he brought interest rates to 1% because he was so worried about the economy. Now the Fed is supposedly so confident, and they can't even raise interest rates above 0.5%. This is a complete bubble that the Fed has blown. You know, Trump was right when he was a candidate. It's a big, fat, ugly bubble. It's even bigger, fatter, and uglier now. And it's not just the stock market. And by the way, the bond market bubble has already burst. And so interest rates are rising, and that is going to compound the problems for an already weakening economy. So if the economy was weak last year, it's going to be even weaker next year.
Now, you've expressed some concern in the past for the impact of a Fed rate hike on the housing and auto sectors more specifically. What do you see as the vulnerability there?
Well, these sectors are completely dependent on cheap money. I mean, people buy houses based on their monthly mortgage payment. And fixed rate mortgages, the 30-year fixed rate has basically gone from about 3.5% when Trump was elected to 4.5% now. It could be over 5% by the time he's inaugurated, and it can easily be close to 6%, next year. I mean, nobody can afford these rates. We already have home ownership near a 60-year low because people can't afford the low rates we had. Obviously, they're not going to be able to afford the higher rates that we have now or the rates that we're getting in the future. So you're going to see a drop there. You're going to see a complete end of the refi market. So that lifeline is gone. People were able to rely on lowering their payments with refis. Nobody could do that anymore. And I think now, with a higher cost to borrow money to buy houses, real estate prices are going to start to fall, so that means more foreclosures again, so that's a problem. And the auto bubble, this has all been about 0% down, letting people roll the negative equity in their trade-ins into an even bigger loan with cheap money. It's been about leases and extending the payments. This is a huge subprime bubble, and the air is already coming out of that.
Yeah.
So all the things the government propped up with cheap money are going to topple as you take the cheap money away.
Okay, when I interviewed you back on election day, you talked about how traders had decided a Trump win was bad for stocks, good for gold. That was certainly the consensus at the time, but as we know, the opposite has turned out to be true. Investors are seemingly bullish on a Trump economy. So what are your thoughts there? Because it sounds to me that you're bearish on the economy, but you do seem to be a little bit more upbeat about Trump. Can you be bullish on Trump, bearish on the economy? Where do you stand?
Well, first of all, that was the original reaction, right? I mean, as soon as Trump won, the stock futures were down, whatever, 800 points. Gold was up 60 bucks. So that knee-jerk reaction was there. But if you remember, I said I didn't understand why people thought that Trump was worse for the stock market than Clinton, because I said Trump is promising things that would normally be good for the stock market, like less regulation and lower taxes. But the problem is the stock market is already overvalued. It's a bubble. And so just because we're going to get some tax cuts and regulatory relief doesn't undo that bubble. I mean, it helps, but it's not going to justify the inflated valuations. And of course, as interest rates go up, that automatically brings stock values down. But I think it's also interesting that the same stock traders that were so worried about what would happen to the market if Trump won, the minute he won, now they just started buying, because all they want to do is justify a move up. Believe me, had Clinton won, they would have said, oh, we dodged a bullet, let's buy stocks. You know, we dodged Trump. You know, this market is feeding on itself. You know, it's like a horse with a bit in its mouth, and it keeps on going. People are ignoring that the things that they think are going to happen are impossible. They think, oh, now we're going to get fiscal stimulus, so we don't need monetary stimulus. You know, if we get the fiscal stimulus, we need monetary stimulus more than ever to make it possible. There is no way to finance these deficits unless the Fed steps up and does it. Now, of course, this is a mistake. They shouldn't do it. That's why we're in so much trouble. But I don't think there's any way Trump can fix these problems. They are unfixable. We can't stop the bubble from popping, nor should we try. You know, Trump was elected, and I was saying I thought he would get elected because the economy is so messed up.